Fifth semester BCom examination, February-March 2024. Principle and practice of auditing. Section A, 2 marks questions. First one, who is an auditor? An auditor is a trained professional who is responsible for conducting audits. The primary role of an auditor is to assess and verify the accuracy, completeness, and reliability of financial statements, records, and reports. What is audit planning? An audit planning is a detailed strategy that sets the nature, timing, scope, and boundaries for the auditor to carry out the entire audit procedure. What is internal check? Internal checks are integral components of the overall internal control system and may be understood as the mechanisms used to verify the accuracy and reliability of daily transactions. Mention any two types of audit reports: clean or unqualified report, qualified report, adverse or negative report, disclaimer report. What is verification? Verification is the systematic process of examining, confirming, and validating the accuracy, existence, ownership, valuation, and disclosure of an organization's assets and liabilities as presented in the financial statements. What is embezzlement of cash? Embezzlement of cash is a type of financial fraud where someone takes money that were entrusted to them and uses them for a different purpose than for what they were intended. Who can appoint the auditor of a company? The person or entity that appoints company auditor depends on a type of company, that is non-government company, government company. What is code of ethics of auditor? A code of ethics is a set of principles or guidelines that outlines the moral and ethical behavior expected of individual or members of a particular professions or organization. Section B, 4 marks questions. Answer any three. First one, write the objectives of auditing. Objectives of auditing. The objective of auditing is to express an opinion on financial statements. The auditor has to verify the financial statements and the books of accounts to verify the truth and fairness of financial position and the operating results of the business. Hence, objectives of audit are categorized as primary objectives and secondary objectives. First, objectives of audit. Two types of audit, that is primary objectives and secondary objectives. In secondary objectives, two types: detection and prevention of errors, detection and prevention of frauds. Detection and prevention of errors types: critical error, compensating error, error of principle. Critical error, critical of omission, error of commission. Next, detection and prevention of fraud types: embezzlement of cash, misappropriation of goods, manipulation of accounts. Next question, briefly discuss audit strategy. Audit planning is a detailed strategy that sets the nature, timing, scope, and boundaries for the auditor to carry out the entire auditor procedure. It consists of below steps: learn about the business, understand what business does and its industries, stop risk, identify potential issues in finance, operations, and compliance, bring big picture importance, figure out what financial mistake could significantly impact the company, decide what to check, clearly state which parts of the company the auditor is going to look at it, set goals, define what you want to achieve with auditor in each area, make a game plan, decide how the auditor is going to do the audit, when, who, what resources you will need, build your team, get the right people for the right job on your audit team, talk to bosses, discuss the audit plan with the company's leader to make sure you are on the same page, set deadlines, decide when you want to finish each part of audit, write it down, document everything about the audit plan so everyone knows what's going on. Next question, state the qualities of a good leader. An efficient auditor should have certain qualities beside professional qualification. He need to carry out the audit work efficiently and smoothly. An auditor need to be well versed in the fundamental principles and theory of all branches of accounting. An auditor should not pass a transaction unless he knows it correct. This is possible only when he is well versed with the principles of accounting. He should not be directly or indirectly influenced in discharging its duties. He must be prepared to resign rather than sign a balance sheet which he knows does not exhibit a true and fair view of the state of affairs of an organization and give a false report. He should not disclose any secrets of his client. He must have a tactful in extracting full information from his client. He must not adopt an attitude of suspicion at work. He must be prepared to hear arguments and must be reasonable in his decisions. He must be caution, vigilant, accurate, and methodical. The auditor should be able to write the report correctly and forcefully. You should have undergone training in various aspects of business organization, management, and finance. Last but not least, an auditor should have common sense. Next question, what are all the objectives of valuation of assets? First one, correct valuation of assets and liability, true and fair view, existence of assets, ownership and title of assets, free of charge, arithmetical accuracy, verify possession, depreciation plans. Next question, what are the contents of audit report? Title of the report. The title of the report, audit report, should help the reader to identify the report. It should disclose the name of the client. The title distinguishes the audit report from other reports. Name of the address. The address normally refers to a person who appoints the auditor. If a company appoints the auditor, the address should be shareholders. As per law, the complete address of the addressee is required. Addresses for the statutory audit shall be shareholders, and in case of special audit, it is central government. Introductory paragraph. The introductory paragraph should specify that it is the auditor's opinion on financial statements audited by him. The period covered by financial statements should be stated with exact dates. Scope. This part should include the matter of fact relating to the manner in which audit examination was made. The audit examination should cover company's accounts, profit and loss account, balance sheet, and cash flow statements. The examination should be as per the relevant law. The auditor should not curtail or limit any examination task. Opinion. The auditor's opinion on the books of accounts and financial statements examined by him is based on the information and free from bias. The auditor has to give his opinion as follows: whether the financial statements are automatically correct and corresponding, arithmetically correct and corresponding to the figures recorded in the books of accounts. In case of unqualified opinion, whether the financial statement represent a true and fair view of the state of affairs and the result of operations. In case of qualified opinion, if the balance sheet and profit and loss account do not represent a true and fair view, the reason for what and where is wrong. Signature. The signature part should include manual signature of auditors. The personal name and signature of the auditor should be given. If the auditor is a firm, the signature in the personal name and firm name should be given. Place of signature. This should include the location of the auditor or the auditor's firm, which is ordinarily their city. Date of report. The date of completion of auditor work should be mentioned in this section. Section C, 12 marks question. Answer any three of the following. First one, discuss the steps to be taken by auditor before commencement of new audit. The key preparatory steps must be followed to set up the stage for smooth and effective audit process. These steps are essential for both the auditor and the organization being audited. The important steps are listed below. Receiving the appointment letter. Generally, the auditors of the company are appointed by the shareholders in the annual general meeting. Therefore, an auditor should get and examine the copy of resolution passed by the shareholders in the general meeting to confirm and should receive the appointment letter before starting a new audit. Communication with the existing auditor. In case an In case an audit proposal is for an existing business, the proposed auditor should communicate with the previous auditor to know whether he or she has any objections to raise. It is also an official requirement as per the Institute of Chartered Accountants Act 1949 and has to be adhered by the Chartered Accountants. Acceptance of appointment. If the auditor is satisfied with the communication with the previous auditor, then the auditor should confirm his or her acceptance through a letter of acceptance. Ascertaining the scope of audit. An auditor should know the nature of audit of his clients before starting the work. If the nature of audit is statutory audit, the scope of the audit should be in accordance with the statute. In other types of audit, an auditor should discuss with clients the nature of audit work to be undertaken. Adequate knowledge about the organization. Before determining a basic approach to audit, an auditor should gain adequate knowledge about the organization. He must familiarize himself with detailed information of the business, its activities, and should visit the location at which it operates. This will help him to understand the nature of transactions which are recorded in the books of accounts. Knowledge about the accounting system. The system of accounting employed by the client should be examined by the auditor even before taking up the audit. He should obtain a list of all the books maintained by the organization for recording its accounting transactions. He should also acquire complete information about the internal control system adopted by the organization. Knowledge of technical details. The auditor must ensure that he has grasped all technologies about the business. Only then he will be in position to identify transaction of accounting reports. Complete list of principal offers. The auditor should collect a complete list of all the principal officers with their names, duties, and responsibility and power. The auditor should also collect their specimen signatures. Observation of the previous auditor's report. If the company is not a new one but old, then the auditor should also inspect the report of the previous auditor. This will help him to understand the nature of accounts, important area where a detailed check is required, and the techniques to be used to conduct the audit work efficiently can be identified. Instructions to the client. Once all the above steps are completed, the auditor should issue clear instruction to their client that the account should be finalized and kept ready for audit. Next question. Explain internal check with regard to wage payment. Wages are very important item of expenditure. The system of internal check of wages should be devised in a planned and careful manner. There are great possibilities of frauds in concern employing a large number of workers. A sound system of internal check in payment of wages may avoid errors and frauds which may be revealed from time and piece wage work records. Maintenance of wage records, time records, piecework records, overtime records, pass out records. Time records. The person in charge maintains a record that documents the admission and exit time of each workers. The supervisors or manager of each department are responsible for maintaining records pertaining to the amount of time spent by employees. Piecework records. The responsibility of maintaining this record lies with the supervisors or managers who diligently document the precise tasks performed by each employee. Ultimately, the salary are determined based on the record kept by the foreman and the work card. Overtime records. The pre-approval of overtime should be granted by an authorized person. It is recommended that employers provide employees with overtime slips that include the worker's name and identification number. Pass out records. It is essential that the workers are not permitted to leave the premises of workplace unless they possess formal authorization. Preparation of wage sheet. It is recommended that the group of clerical personnel undertake the task of conducting a thorough comparison between the records kept at the gate and those held at pay office. First one, base. The preparation of pay sheets should be facilitated by using the attendance register, overtime slip and pass out slip. Separate sheet. It is recommended that distinct pay sheets should be used for the employees who were paid based on the time worked and those who are compensated based on the number of units produced. Checking. It is essential that the pay sheet undergoes a thorough examination and receives a counter signature from both the workers, manager, and foreman to ensure its accuracy. Signature. The wage sheet should be countersigned by the worker who have prepared it. Approval. It is essential that every wage sheet get approval from the manufacturing manager or managing director. It is advisable to establish specific protocols for remunerating those who are not present. The exact final sum that need to be withdrawn from the financial institution in order to fulfill salary payments. The encouragement of advanced workers should be avoided, and in case where it becomes necessary, such advances should be administered through the petty cashier. It is important to keep a distinct record for casual workers who are also working inside the plant premises. It is imperative that undistributed pay be promptly transferred into the designated bank account. Next question. Explain the duties and liabilities of a company auditor. Duties of a company auditor: duty to report, duty to make certain enquiries, duty to sign his audit report, duty to assist investigators, duty to give a statement in prospectus. First one, duty to report. Under Section 143 of the Companies Act 2013, an auditor of a company should make a report to the shareholders or the accounts examined by him on on every balance sheet and profit and loss account laid before the company in the general meeting. Duty to make certain enquiries. Under Section 143 subsection 1 of the Companies Act 2013, an auditor of a company should inquire whether the transaction of a company which are represented merely by the book enters are not prejudicial to the interests of the company. Duty to sign his audit report. It is the duty of an auditor to sign the audit report prepared by him. In case of a firm of auditor, any partners of a firm should sign the auditor report. Duty to assist investigators. It is a duty of an auditor of a company to preserve and produce all books and papers relating to the company under investigation to investigators or inspectors, and to give them all assistance in connection with the investigation. Duty to give the statement in prospectus. A prospectus issued by an existing company should contain a statement from the auditor of the company regarding the rate of dividends paid by the company for each of the 5 financial years preceding the issue of prospectus. Next, liabilities of an auditor. An auditor to audit the accounts of public limited company is appointed under the provisions of Indian Companies Act. His duties and liabilities are also laid down in this act. If he fails to perform his duties in accordance with the provision of Companies Act, he is held liable. The liabilities of professional accountants broadly fall under the following heads. Civil liability. Civil liability of an auditor arises where it is proved that certain financial losses have actually been suffered by the company and company auditor is liable for those losses. The civil liability of a company auditor may be studied on the following lines. Liability for negligence. Negligence means acting carelessly for or failing to perform a duty enjoined upon a person. An auditor is appointed by the shareholders and he is expected to safeguard the interest of them. If he fails to do so and his client have suffered a loss due to his professional negligence, he will be held liable to make good that loss on an action being taken against by him. The party. Liability for misfeasance. The term misfeasance means branch of trust or branch of duty imposed by a law or negligence in the performance of duties which has resulted in some loss or damage to a company or its property. If the auditor does something wrongfully in the performance of his duties resulting in financial loss to the company, he is guilty of misfeasance. Next point, criminal liability. Under the Companies Act, an auditor of a company may be found guilty of criminal offences if he willfully makes a false statement in any report, return, certificate or balance sheet, etc. The criminal liabilities of a company auditor under different sections of Act are as follows: making default in report willfully. Section 233, if the auditor willfully makes a default in making his report to the shareholders according to the previous of sections 227 and 229, if this default is provided willfully, he will be punishable with the fine which may extend it to rupees 1000. Not helping the inspector. Section 240, the auditor of a company is required to help an inspector appointed by the central government to investigate the affairs of the company. If the auditor does not do so, he is punishable with the imprisonment up to 6 months or with the fine up to 3000 or with both. In case of not returning the document, section 227, in the course of winding up of a company, the auditor is required to return to the court any documents in his possession. If the auditor fails to appear before the court, he can be arrested. Falsification in accounts, section 539. If the auditor is found guilty of destruction, mutilation, alternation, falsification, or secreting of any books, papers, or securities, he may be held responsible. Future, if the auditor makes any false or fraudulent entry in any registered books of accounts, documents of a company, he will be liable for punishment with imprisonment up to 7 years and shall be liable to fine. As an auditor of a company, how do you value the following: fixed asset, current asset, and intangible asset? First, fixed asset. When an auditor values fixed asset, they use analytical tools to determine the fair market value of tangible assets. The valuation of fixed asset involves applications of analytical tools to determine the fair market value of tangible asset such as land and building, office equipment, furniture, etc. Some things to consider when valuing fixed asset: valuation method, book value, market value, depreciation, and accuracy. Current assets. Asset valuation is a process of determining the current value of company's asset, including current assets. Current assets are the company's most liquid assets and are listed first in the asset section of a company's balance sheet. Current assets are valued at a cost or net realizable value, whichever is lower. Current assets include cash, accounts, receivables, stock inventory, marketable securities, prepaid liabilities, and other liquid assets. Intangible asset. The valuation of intangible assets is an audit is important for meeting accounting standards and keep stakeholders, investors, and regulatory bodies informed. Some examples of intangible assets include plants, patents, copyrights, goodwill, brand recognition, and intellectual property. Valuing intangible assets can be challenging due to subjectivity, data availability, legal protection, and economic environment. Last question: discuss the audit procedure for hotels. Internal controls. Pilfering is one of the greatest problems in any hotel, and the importance of internal control cannot be undermined. It is the responsibility of the management to introduce controls which will minimize the leakage as far as possible. Evidence of their success is provided by the preparation of regular, perhaps weekly, trading account for each sales point and a detailed scrutiny of the resulting profit percentages. With any deviations from the anticipated from being investigated. Room sale. The charge of the for room sale is normal, posted to guest bills by the recipients from the office, or in the case of large hotels by the night auditor. The source of these entries is invariably the guest register, and the audit tests should be carried out to ensure the correct number of guests are charged for the correct period. Inventories. The inventories in any hotels are both readily portable and saleable, particularly the food and beverage inventories. It is therefore extremely important that all movements and transfers of such inventories should be properly documented to enable control to be exercised over cash.